Monday is looking like a very bad day for millions of American college students. Because the U.S. Senate failed to reach a deal this week, student loan interest rates will nearly double to 6.8% on July 1st for more than 7 million students. That adds thousands to the cost of a degree. Joining us now is Carmen Wong Ulrich, industry professor in finance and risk engineering at NYU Polytech here in New York. Good morning, Carmen.
Good morning. Good morning.
So what kinds of increases can students expect to see?
Big ones, really big ones, because this is now the biggest personal debt outside of mortgages that we have as a nation. We're up to $1 trillion. Now, what does 3.4 versus 6.8 really mean? If you look at the average student loan debt, around $24,000, $26,000, that's the difference between paying $5,000 in interest or $11,000 in general on average in interest. So it really doubles those payments, and it's a big trouble for students. Now, this is incoming students and Stafford federal loans.
So if you're looking to take out a student loan coming up, this is going to affect you.
Exactly. So this is, we have until August when the loans start to be taken out, but something has to be done. If nothing's done on Monday, they can make more decisions the July 4th weekend. Everyone's going to be off on the 10th and decide to either make it retroactive or to go from that point.
And if they do it retroactively, because this has happened before and they always end up going back and fixing it, does that mean anything in the end for students?
It means a lot more money, a lot more payments. And here's what's really startling is that if you look at the data, especially for kids under 30, and I say kids under 30, 2 out of 5 end up in delinquency in the first 5 years. That's huge. That's 40% of folks who owe the money. And remember, student loan debt cannot be discharged in bankruptcy. So this is on par with buying a home, and it's not a debt that you can get out from under of.
So if you're, at this point, Carmen, if you're just starting the process of taking out a student loan, what should you be doing?
All right, here's what you really need to be doing. Like I mentioned, this is a huge responsibility. It's not a rite of passage. This is an investment for you, so you want to take it incredibly seriously. You can make sure to lower the cost of college before you go and apply for loans. So that means choosing what kind of college, full-time, part-time, where you're going to go, then decide on what loans, and research those loans. If you have trouble with repayment, make sure that you put something in action. You can go to finaid.org for more information on the income-based repayment program. There are options for you. And here's the #1 bit of advice you can get out of this is actually graduate in 4 years. The biggest way to cut down on the price of your degree is to actually graduate so you can have a degree to go into the workplace and make a return on the investment.
Great advice. Carmen Wong Ulrich, thank you so much for being here. We appreciate it.